Let's start first just by taking a look at Tesla. And what we're going to do is go into the Discord community and we're going to go to the Tesla bot section. Most of the Tesla trades that I will share publicly here are usually going to be posted within the Tesla bot section. For those of you who are not part of our Discord, or if you are, and you don't really know what this section is, basically, we've come up with a script, which I've shown you guys in past videos before, but we've come up with a script that is really reliable for swing trading. And what happens is every single time our trigger is met, there's a call out that is posted within the Tesla bot section. But I also use it as a way to notify everybody within the Discord of what trades that I'm taking. So you can see here that this is a snippet from Friday regarding the premium watch list. And I ended up taking a position on Friday as well, which we did share here. So you can see on 8/11, we said opening 30 call credit spreads on Tesla, August 18th, 250 and 50-cent calls. So if you don't know what call credit spreads are, you just go to our Discord, go to the courses and seminars, and you can take our videos. What you're doing is you're selling a covered call, which is a bearish position. But if you don't have the money to front all 30 of those covered calls that you would sell because they'd be very expensive, what you could do instead is actually go through and buy a call above it as an insurance policy. And what this will do will act as an insurance policy against your bearish position, and it will cap your gains and you will make significantly less money. But the beauty is you're not going to go ahead and blow your account up, or you're also going to not need to have, 30 times, 100 shares. 100 shares. You're not going to need all of that sitting in an account to actually cover it or sell it naked, which would be absolutely insane. So instead, what we're going to do is use this in conjunction together by buying a call and selling a call at 250. And what this means is that we don't think Tesla's going to close above $250. So on Friday, when we opened this position, my psychology going into this was, I think Tesla's probably going to break 240 in the next couple of weeks. I won't be surprised if Tesla moves back down to $210. I'm a long-term investor and I'll definitely open a major hedge against that position, which we'll talk about in a future video. But my thought process I think we're going to bounce around here and we're going to sit between 250 and 240 for the next week. So as a trader, how do I make money off of that volatility? And how do I make money more so just off of the sideways movement? The easiest way to do this is by selling calls or puts or by trading spreads. And the reason for that is every single time that you buy an option, you probably notice to yourself that the theta decay is obviously going to get worse and worse as we get closer to expiration, but that money doesn't just go somewhere. That goes to the person who sold you the actual premiums. So the good thing is when you're doing credit spreads, you're making the bulk of your money on the back end of the position, so closer and closer to expiration, but you only have to be right about the overall direction, not the acute direction or where we're going to go within the next couple of days. So looking at Tesla, the reason I entered was more so that I thought I would make money off of Tesla sitting here around $240. And if we did collapse and start to break 240, which happened today, I would just end up taking the small win that I had. So I closed it out for $1,000. I could have made it max $1,800. So I did close it out a little early. But the reason for that was pretty simple. What we were looking at this morning for Tesla, we saw this is actually NVIDIA, but we're going to go through and put this on Tesla. But we saw that we were having this consolidation range right around here at $235. And now I always think to myself at this point, because there's more than just the classic textbook, right? There's the textbook of, okay, what's my risk versus reward as this position is going in my direction? When do I cut? Is it based off of a trailing stop loss? Is it based off of a certain percentage that I want? Thing when it comes to spreads is that you're capping your gains, but you're also doing this, which is good in my opinion, because then it's removing the thought process for you as to when to close your position for a loss or when to take a profit. It's just doing the guesswork for you. But this morning I was up 60%. And I said to myself, all right, got a decent amount of money tied up in this position. The max I can make on Tesla is if we end up seeing this, potential drop down for the rest of the day, the max I could have made was $600-700 going into the rest of the week. So already there's really not that much more money that I could potentially profit from going into the rest of the day. But look at what happened earlier this morning. So we have this big sell-off. This is a harmonic ABCD pattern that had happened here. We get a buy, but normally if this is going to be a reversal of a trend. So in this point, we get this drop, consolidating here and I see this buy signal go through. So the swing trader in me says, you're up 60%. You're tying up a lot of capital, which I could use towards another trade, which I did. So I have opportunity cost I have to worry about. And I also say to myself, you know that there's going to be some fuckery around $240. And I said this, I know that you have to understand, I don't talk too much about stop hunting here, but there are a lot of people who are playing, and we will go back to the day trade, I promise you. But looking at this, there are a lot of people who are watching 240 as a major support. And there are going to be a lot of players who have stop losses set at 237. There's going to be people who have stop losses at 236, stop losses at 235, stop losses at 234. And what happens is on days like this, we get the gap down, everybody gets stopped out, and then big money does the old fuckaroo, and then they just rip us right back up to 240. And then what do you notice? 240, as we said this morning, is going to be our resistance point. So when we're looking at the 1 minute chart, I'm saying my swing trade's up 60%. I don't care to make an extra couple $100 off of it. I closed it and I decided to go long. Now, when I decided to go long, what was my reasoning here? So this is going off of a 1 hour chart. These zigzag lines you can see here, they're just 1 hour Fibonacci's going off of this harmonic pattern. And basically, this is your 0.618 Fibonacci level right up here, right where we have this level at 240. So we decided to go long once we got our buy signal. And basically, we're running a 2.5 ATR. That's what this green line is. So this is our trailing stop. As the stock's moving up, right, we enter this position, stop loss on lower low. Ultimate take profit or goal is at 240, but we're riding this as a trailing stop. We get all the way up to 240. I close out my position. Perfect trade, right? Does work out that way. Perfect trade. So looking at this now, I am probably going to open some call credit spreads before the bell. I really wanted to see us move back to 240. And what I should have done was when I closed my calls, just reopen the credit spreads. I'd be quite honest, I just forgot. I had a lot of work happening this morning. I just entirely forgot about it. So I should have went back with my call credit spreads back up at 240, but I didn't. So as we go into the rest of the week for Tesla, 240 is the level that I'm going to be watching. I'm predominantly this week going to be trading spreads. I'm not going to be opening my hedge probably till Thursday, Friday against my long-term position if that occurs, because I don't want to pay all the premium and the theta K just to watch it sit sideways for this week between like 235 and 245. So I'm sitting out mainly for that.